And great to be here. I'm sorry I'm not there in person today. I had a great time yesterday seeing everybody and speaking to everybody. Uh, Daniel, if you're there you go. Yeah, take front and center if you would. You're going to be a very key person during this discussion. So to the extent that people want to get involved in this conversation, I encourage everybody in the room to participate. You're going to be the sort of the key person pointing it all out and saying, hey, this person wants to speak or something like that. So I'm going to need your help in getting those people involved. But anyway, as Marty mentioned, I'm sorry, what did you say, Dane?
I said traffic cop it is.
Excellent. As Marty mentioned, we're going to be speaking on crypto assets and valuations today. In fairness, I understand some things about this space, but there's a lot of things I don't understand about this space. And that's why Marty has convened these three gentlemen here to speak about it. Oltac, Unsal, president of MetaFund, David Munoz, CEO of VekTrust, and Daniel Marcus, who's down as a professor at NYU, but as you will learn, he is so much more than that. He's heavily into this space, and you're going to treasure speaking to these three people today. My name is Mark Heil. I'm with the Pacific Premier Trust. I do institutional sales for Pacific Premier Trust. We are non-fiduciary custodians of investments into alternative assets. The institutional side particularly gets involved when we're trying to bring in multiple people at one time. For example, I'm involved in a $3 billion custody for custodying, $3 billion worth of loans from a private equity fund on the West Coast. We're working with an RIA who's a fund manager to custody over 700 investments into a particular group that they sponsor. We also get involved in ESOPs. We currently are working with an ESOP group to, there's a modification going on. People have to roll money out of the ESOP into our IRAs, and we're going to custody those for them. As Marty alluded to just a minute ago, being that I'm part of a bank, I have a disclosure I have to read, so bear with me just a minute. Information presented is for educational purposes only and is not intended as or may not be relied upon as tax, legal, investment, or other advice. Pacific Premier Trust performs the duty of a custodian and as such does not evaluate, recommend, or endorse any particular investment opportunity. You're advised to consult with your professional advisors for specific guidance regarding your investments. Investments are not insured and subject to risk and loss of principal. Just to be clear, so where we stand as a bank looking at this space of crypto, it is ever changing and it is always moving. We have some of the largest crypto funds on our platform. As of right now, we don't touch the coin. It has to be through a fund form or a company form, or that we won't take possession of the coin. But I think by the end of the year that may change. So I'm very excited about the progress and the things that we're doing here. I've mentioned our panelists, but it's time to hear from them. So Oltac, would you just give a brief background on yourself and on your company and tell us a little bit about MetaFund? Hey, you're on mute, Oltac.
Nope, can't hear you.
Does anyone know American Sign Language?
You're on mute. Yeah, unmute, Oltac. Bottom left.
Don't you read lips, Dan?
Yeah, but usually I only assume people are saying expletives.
Why don't we go to the other panelists and then Oltac introduce yourself after.
Fix that. So Dan, since you're there in person, why don't you go next? And it says here you're a professor at NYU, but you've got a little more background than that in this space. So let us talk away here. Give us your background.
Thanks, Mark. Yeah, I'm happy representing the in real life people or the in real life person. So yeah, as you're alluding to, I'm a professor at NYU. I teach in the sports business program, and if you follow Web3, you know the intersection between sports and Web3 is very, very prominent these days. So I specifically teach a class about the intersection of gaming and Web3, which is obviously very hot. In addition to that, other hats that are relevant here, I'm an attorney, so it's fitting that I'm at a lawyer's office. I've got a couple weird niches in the world. One of them being the guy who can diligence and structure complex transactions in sports, specifically the buying and selling of sports teams. So I did 3 deals in motorsport last year. I'm working with a rugby sevens league that's trying to launch in the States in the next 18 months. And then, of course, I've sort of had a whirlwind entree into crypto as an attorney. And if you listen to the Wall Street Journal, apparently there's not enough crypto attorneys, so maybe it's something you guys should think about. And so in the last year, I've worked on a couple of big projects, specifically in the NFT realm. One called Punks Comics, which raised about $100 million. Another one called Nuclear Nerds, which has grown several million in the last year. And so it's becoming an emerging part of my practice. And then, for a stint, I spent a while covering the intersection of sports and Web3, among other things, for Forbes, and now I do the same for Kevin Durant's media platform, which is called Border.
Cool.
Yeah, that is so interesting, especially, what we're seeing now in these esports situations. I was telling you yesterday, Dan, that my son is very much involved in Rocket League. And it is, that what a huge thing that is. And then now it's actually people gathering in like Madison Square Garden to watch things on the scoreboard, right?
Yeah. It's like, it's the same reason we watch, Tiger Woods play golf, because these people are really good at what they do. And it's hard to replicate it, right? So
sure. Well, I see Oltac has got his audio figured out, so I'm going to move it back to him. And Oltac, why don't you pick up and tell us about yourself?
Well, I had to get my phone on here too. But now I'm having an echo. Oh no.
Just turn off your
Hold
speaker
on one
on your
second.
computer.
Let me fix this real quick. And I apologize in advance now. It should be fixed. Can you hear me okay?
We can hear you
Yes.
just fine. That's great.
Excellent. Thank you so much. Well, great to be here. I've been in the crypto since about 2013. Of course, we went through all kinds of iterations with it. The latest iteration calls for the NFT, the art world coming in, crypto, Web3, all that good stuff. We're trying to create a lot of things here as a fund, and we're trying to establish some sort of a multi-luck surface area, VC in there, trading in there, NFTs, technology stacks, and all that kind of stuff, which I think is the right way to go about it. Only because I feel a little bit like a cheat here. We're definitely not what you call an institutional player, because this is not an institutional space per se. There's a lot of FOMO going on, a lot of cultural trading, a lot of crazy stuff. And the panel is about valuation. I think the valuations are crazy. And that would be my only institutional semi-institutional comment about the space. The volatility is there, as you know. Regulation is not there. It's just crazy. So I have a presentation which I'm hoping the audience will take a look later on. It's not called Web3, it's called Wild West 3, because it does feel that way. And so how would an institutional or semi-institutional companies such as MetaFund deal with this world? I think it deals with it very nicely. Thank you very much. But it's tough, so we had to develop our own ways of looking at it. Whatever valuation is called, it's not going to be done by the financiers in us. And I hail from Stanford Business School, and I did my valuation exercises 20 years ago in the CDO space at Goldman Sachs. So much as I love valuation, I have the best Excel sheets and all that. It clearly doesn't apply here. There's some other things going on here. So it becomes a bit of a risk management and all that. I'm sure we'll talk about all that stuff. And that's all I got to say for my introduction for now.
Well, it's very interesting because I used to work in the fund administration business, and one of the people that owned the businesses used to say valuation of early stage company was an exercise in storytelling. And I think the stories just get better now in the crypto space.
Well, it's the memes of production. It's not memes of production. It's a meme. I mean, if anybody in this audience and panel say to me that moonbirds, I don't even know if you guys know what moonbirds is. If moonbirds is 100 ethers, then I don't know. I'm gonna give up investing in the space. So I don't know. Anyways,
David, I want to switch over to you and give you a few minutes because you're actually interesting in terms of what you do in this space. So why don't you clue in everybody in New York and on this internet conversation, what's going on?
Sure. Thanks, Marty, and thanks, Mark, for having me. I'd like to. I hope I can contribute a few thoughts here on the discussion. I have 25 years of experience in financial services. Started working in crypto probably in 2015. Built a broker dealer in 2016, 17, 18. And VekTrust is currently building 4 products in the crypto space. So one is in wealth tech, one is an on-ramp, off-ramp for our other businesses. The third one is a social media platform, decentralized social media platform. And the fourth one is a payment service that we're developing. That's in early stages of product market fit. We're investing our own money in building these businesses. We have, a decent insight into valuations. I can't say that I know had thoughts around valuations in specific areas. I have broad thoughts in terms of coins and utilities and services and protocols. And of course, would love to contribute some of my macro thoughts in terms of what the development of valuations will be over the next, say, 5 years. So with that, I'll kick it back to you, Mark, and let you guide us in the discussion.
Well, Arthur, who led the last panel, ran a discussion on crypto yesterday. I don't know if Dan had arrived in time to see that yesterday, but it was a really terrific. So I hope to build on that, and I hope that we're, going to move in some deeper and different directions here. But let's start off with the basic question. Where's the opportunity in crypto today? Where, is it in currencies, NFTs, Metaverse, security tokens, blockchain, all of them, none of them? What are your thoughts?
It seems like a free mic, so I'll grab it. I think Robin Williams once said, cocaine is God's way of saying you have too much money. And I think NFTs are very much the same way, where you see everyone from gaming to entertainment to sports to, of course, art getting involved in NFTs in some form or fashion. And, if you're a creator, it's great, right? Because they've broken the model as far as like how that transaction works. Because if you were an artist, right, you make a piece of work and an artwork and you sell it one time and you make money once. Whereas there's a fee tail on each subsequent sale if you're a creator, someone that's making NFTs. So from a creator standpoint, certainly NFTs make a lot of sense. But you're not going to find me buying and sinking a lot of money into like Patrick Mahomes NFTs, because I'm as an attorney, I'm always the bearer of bad news. Because when it was originally explained to me, right, and I'm sorry, I'm just focused on NFTs. We can take this anybody doesn't want to take it. But when it was explained to me that you only get this token and you don't get any IP rights, which varies from project to project, of course, I was like, that's nuts. So I had people coming to me and saying, can I license this? Can I do this? And the answer is, if you don't have the IP, it's unfortunately no. So I would say, it feels like we're in a financial Tower of Babel, especially with all these different kinds of coins, right? Like, what's something worth? It's worth whatever someone willing to pay for it. So I feel like we're all subject to like a great social experiment right now, where there's been all these markets created for these different coins, but you wonder about the sustainability. So there's some roundabout answers in there, but maybe this gets kicked off.
I think it's was probably dealt more with the second question on my list, what to avoid. But it's great that you chimed in with that. Just a quick follow-up. I mean, yesterday, Carlos Nietos spoke about NFTs, and he said they're trusts that never die. And what makes them unique is actually what's written into them and how they are structured and how they're put together. So what's your reaction to that? And as you think about this, so you had the Patrick Mahomes one you said, but it could also be, and I guess, this is part of where the area I start getting confused, like what's the difference between that and a smart contract? So maybe David, you could pull some light onto this whole subject here for me, if you would.
Yeah, look, I'll reiterate the thought around where NFTs are today. I mean, they're really just, it's a momentum play, and I think I'll just go back to your first question and just mention that where do you invest depends on what your time horizon is. If you have short time horizon, you're a momentum investor. If you have a long time horizon, then you maybe take Oltac's strategy of just placing a ton of very small bets, or you go my route, which is you focus on a very few projects where you can have a very direct impact and really build liquidity and build adoption quickly to try to get that same sort of meteoric rise in valuation. I'll just go back to the NFT question that you asked, Mark. And NFTs to me are really just a proving ground, right? NFTs are a proving ground for where we're going in the next 10 to 20 years, right? Where we're going to tokenize everything. Now, you're going to have a car, your car title is going to be tokenized, you sell it to someone else. All of the process of getting that registered, licensed, insured, et cetera, that's all going to be automated through smart contracts, right? All of that's going to go away. That means there's going to be a tremendous amount of efficiency that happens because that's going to happen instantaneously. Unfortunately, a number of jobs will be gone because of that. The government will have a lighter burden because of that. But if you just multiply that across anything imaginable, that's a transaction where there are property rights that can be ascribed to an asset that in a virtual world, then what we're seeing in NFTs is really just that proving ground today. And so, whether it's the beginning with the crypto kitties, whether you're currently for the NBA NFT or whatever it is, or a moonbird, whatever it is, this is what you're seeing today is just the manifestation of a lot of people making a ton of money and not really knowing what to do with it, and kind of thinking like NFTs is like the right thing to invest in. But my personal view, which I agree with, I think is it Danny or
Yeah.
Dan, I totally agree with you. Like unless you have an ability to buy an NFT early and then promote the hell out of it through some media outlet, there's no sense in buying NFTs. But there is sense in going after the services space, the minting side of the NFT of NFT land, because we are moving to a tokenized world.
Well, I just want to pick up. I just want to pick up on one thing you said, which I think was really important, which is what we're seeing right now in terms of valuations is very much a function of people having too much money. You have all these people that bought into Ethereum and Bitcoin really early. And the cynic in me just wants to say they're trying to avoid a taxable event. So they're like, okay, well, let's throw some of this into an NFT project like a Bored Apes, like a what have you. That's why you see the emergence of things like DAOs, for example. These are functions of technology outpacing regulation, but I think that gap's going to be closed sooner than later. But anyway, I just want to pick up on that.
No, I think that's a good comment. Reminds me of like the .com burst in '99, right, or 2000 when that happened. A lot of people were putting .com on the back, and they were going out the market and raising millions of dollars and selling these things inside of 18 months, but there was no business there. And NFTs sort of sound like to me they're sort of along that same track right now. And again, it was a function of too much money being in the market, chasing too few good deals. And your point that it's, everybody wants to get involved in this area. They're just not sure how to do it and what makes the most sense. Oltac, you want to throw in a couple thoughts here?
Yeah, sure. I'm glad you brought up the 1999 because I will give you a very personal example about it. In 1998, I quit Goldman Sachs to go do startups in Silicon Valley. Everybody thought I was crazy. My dad said, I'm going to disown you because that is the stupidest thing that one could ever do. And of course, by 2001, everything crashed along with my semiconductor startup because we were trying to add internet to refrigerators and add internet to cameras. And it was a beautiful idea, if you still ask me, because today we have Instagram, because you can share your pictures from your camera, and now, of course, the phone. My point is, I am now 50, and I see this exactly as 1999. A tremendous blue ocean. A lot of things will happen. A lot of excitement. A lot of people are quitting their good jobs at Facebook and this and that, and jumping into these crazy NFT things. And there's a delusion. And for sure, all this momentum, all this money in a year or two will shake out, like pets.com shook out. But the fact that the excitement is there, the meme is there, the brain trust is going into this. And like, I basically quit everything, and I'm now solely Web3. Again, maybe Redux 1998. But my point is, I agree with the other panelists here. I think that excitement alone are telling me that something will happen at a very deep level where all this excess will be trimmed out, but the fundamental value will still be there. And 10 years from now, when we look back, it's going to be like how we look back into the internet now. It's basically part of our lives. It's like, it's done tremendous value for the world. And so then, for me, the valuation exercise comes down to, okay, if you know what's going to happen in the next 2 years, how do you trade with that? And if you know what's going to happen 2 years on, how do you trade with that? It becomes more of a, how do you time these things? How do you place your bets in such a way that you basically roll with the flow? But ultimately, like David is saying, man, everything is going to get tokenized. We just started this Stanford alumni DAO, right? I mean, it's going to tokenize everything within that community. Why? Because why not? Ownership to the people. So I may sound like a crazy person now after dissing on the moonbirds and all that, but I think there's a way in which these worlds, these universes are existing at the same time. You just need to pick which one to play at a given moment.
Hey,
So,
Oltac, I just bring up, Mark, I just want to bring up a point with Oltac, which is that, so there's a great interest in disintermediation. I think we've seen it with Netflix, right? Everybody used to sell their old TV shows and movies to Netflix. And now instead of doing that, they retain them and they have their own streaming services, right? So a lot of people now sell their product on Amazon, but Shopify has a link into Amazon, correct? And so it kind of sets up an Amazon store you can sell directly instead of using Amazon's apparatus, right? So somebody recently has built an interface to Shopify to all Web3 products, right? So if you have gaming, if you have a game, you can actually open up a Shopify store inside of a video game, right? So there's a product out there in Florida. They've got 100 employees, venture backed, et cetera. So, I mean, it's going to happen, I think, faster than most people think. Any thoughts on that? Oltac? Oltac. Can you hear me?
You're on, he's on mute. His phone's on mute. He needs to unmute that.
VekTrust, any thoughts, Dave?
Yeah, I do have a thought on that. I think that, right now what Shopify does is they're basically, they're taking fiat, a fiat transaction, whether it's on a MasterCard or a Visa network. And, they're either, if you're paying with crypto, they're basically, off-ramping to the Visa or the MasterCard network and then doing the transaction. And then, all that gets done, kind of in the background. The reality is that someone, and I hope it's us because we're working on it aggressively, is going to disintermediate Visa and MasterCard because the interchange fees are just way too high. I mean, the whole world is going toward a much more efficient marketplace. And the question, I think the real question is, this whole view of going of, crypto, fiat, crypto, on-ramp, crypto, fiat, off-ramp, is like one of the most inefficient, is one of the most inefficient processes that exist today because you're paying, because there are interchange fees and there are also transaction fees, for the on-ramp. So, you could be paying somewhere around 5 or 6%, for that whole transaction each way. right? So, so is that interesting? Is that interesting that Shopify is doing that in Web3 application? Absolutely, right? Like absolutely, like the whole embedded finance, concept that has sprung up over the past 5 years and is moving into Web3 applications is real. The next iteration is how do we kill interchange fees? Not on a regulated basis, just like competitively, how do we kill interchange fees? And that when you have a distributed ownership of crypto, that and you have efficient atomic swaps across coins, and you have a payment settlement network that is a blockchain payment settlement network where fees are not 20 or 50 or 150 or 300 basis points, but they're 1 basis point. Well, that changes everything. That changes the whole equation, and really is talks about this whole disintermediation of traditional finance.
And I see where that takes money from, Visa, MasterCard's revenue stream, puts it into your revenue stream. But talk a little bit about the size of the audience. We had this conversation the other day, that's available through the blockchain as opposed to what you currently get through a MasterCard, Visa.
Sorry, you're saying the size of the audience?
Yeah, that's the size of the market, if you will. We sort of had the conversation the other day when Google started up. It was basically, the size of the U.S. audience was 300 million people, right? And now you can tap into 7 billion people. Was I think the point you were making through these technologies?
I think the real question is, you look at Shopify, you look at, Coinbase, you look at, some of these other, let's say, aggregators of crypto users. And that universe is very small. You're talking about tens of millions, maybe 100 million. We need to get to, billions. And I think that the best way to get to those billions is through social networks. When you're applying these technologies to social networks and then use those social networks as jumping off points to build micro communities that then kind of micro ecosystems that kind of then morph and grow and then start overlapping. That's when you're getting into the hundreds of millions and billions of people. And I think that that's a real game changer. And frankly, because you have changed the economics and because you have changed the access, these transaction media are available basically to everyone, to all 7 billion people, not just people who have cards who can qualify for a card.
So Daniel, it seems to me, based on what he said and how this is going to grow, esports is like the proving ground so far for how this can really transact and take effect. What do you think is going to follow the esports in terms of social circles and things of that nature?
Sure. I mean, listen, I think when people talk about things like the Metaverse, for example, right? We just call that a video game, right? Like that's like people are describing SimCity or Roblox or whatever, right? Like we've had this for a long time. This isn't new. So like continuing on the cynicism path, because that's the hat that I'm wearing right now. A lot of companies are like Olive Garden, for example, is making bids for the Metaverse. Nike's making bids for the Metaverse. Again, like I like sneakers, but I don't know that I'm going to spend money on digital sneakers. I like breadsticks, but I'm not going to spend money on digital breadsticks, for example. So, again, there's this whole cash grab element where, everyone's trying to grab momentum in the sense of like the Metaverse. But in terms of gaming and esports, there's a ton of applications that make a lot of sense for Web3. For example, right, you have companies like Epic that make games like Fortnite that aren't games anymore. They're becoming platforms for people to do things, right? Like they have concerts, like Roblox is where kids have birthday parties. And so you think about a game like Fortnite, for example, specifically, they're a free-to-play game. How do you make money off a free-to-play game? You sell a bunch of digital goods with microtransactions. So they're $1 billion+ a year business selling skins. And what are skins? They're basically like different outfits for your character in the game to wear. But there's no effective means of having a secondary market for those things. It's very janky. But if you're able to tokenize, the secondary sale of skins, for example, then you're talking about like a real worthwhile application that has utility and there's money to be made off of it. So, I think when people talk about Web3 and the Metaverse, like gaming's been ahead of this curve for a long time. But now there are new applications for, different, like for the blockchain specifically in the context of gaming. So honestly, I would look to them first because, you talk about like what's something worth, like, it's all about the social contract, right? Like we've all agreed that, this green piece of paper in our pockets is worth something and the government had a role in that. But I think the same is true across Web3, across crypto. And because gaming companies have been able to sell digital goods for a really long time, I think they're almost like the blueprint, if you will, for this kind of stuff. So it's very endemic. Like, so if I was starting something in Web3 and was trying to sell digital goods, I'd sell it within the context of a gaming community first, and then branch out to people that are less familiar with these sort of like digital goods kind of transactions.
Oltac, what's your take on all this? How do you see things?
Well, I look at the tools that we have right now to achieve all the visions. And the tools are, we have OpenSea, right? Largest NFT marketplace. For a normal person to transact there, it's too costly, it's too crazy, the tools aren't there. I look at the current metaverses, some of the gaming metaverses are there. They're just not ready for prime time. I look at the blockchain applications, the transaction speeds, the way even MetaMask, you have this tool called MetaMask, and God bless MetaMask. I love MetaMask, but it sucks, right? A normal person would slit their wrist before, being proficient. And so all the vision is there, and I love the vision, as you can tell by now. I just don't know when all these tools are going to go mainstream. And by the time they go mainstream, some of the excesses will be swept up, like the maximal, decentralization. I don't know if normal people care whether they trust. I mean, I trust the government. I trust MasterCard. I trust Visa. So I could use their systems if they didn't charge that much. I could also use their systems if they permit me to deploy my own stuff on top of it. I know why they don't. And that's why I love the blockchain, right? Because I could do whatever the heck I want. But the tools with which I do these things are relatively crude. And so therefore, and then of course, even by bunching all these things together, we say, okay, Metaverse, crypto, Web3, NFT, even that's just sort of a little bit crude because these things are completely different things. They do share some elements, like they all share decentralized and this, but like Metaverse, I mean, would I use the Facebook Metaverse? Why not? A lot of people will use it. Will some other people, like deep crypto people, use it? No, because they just do not trust anything that's centralized. So I think the future is going to hold a mixture of centralized versus decentralized. It's going to hold some tools that are they have to be super easy to use. It's going to be new ways of doing things. And so it's exciting, but we're at the 0.1 level. Even like blockchains, it costs so much to transact on Ethereum that, why would you transact on Ethereum? You wouldn't. You have to be crazy to do that, for instance.
You brought up, I think, two really good themes in your speaking there. One is adoption, of course, and I want to delve into that. But maybe before we delve into adoption, we just talk about regulation for a little bit. And the thing that I think you brought up is one that I think merits some discussion. That is, can DeFi and a regulated crypto world exist simultaneously? And David, I'll throw that out to you.
Well, I think the first question you have to answer is what's going to happen with stable coins. Because stable coins have really been the grease that have, allowed, most projects to flourish, at least back in the day. Today, not as much. And stable coins continue to be a fundamental part of the transaction medium that that most players are considering when we're talking about payments, particularly just because of the volatility of other coins. So what happens with stable coins is, I think, a sort of a fundamental question. And while I am, I guess, not all the way with Oltac in terms of my trust of government, but further than most people in crypto, there is no way that the government is going to let go of money printing. I mean, we saw what happened with money printing in the U.S. in the 1870s, and it was a tragic exercise. I think that the government is going to deploy CBDC, not just the U.S. government. There are many governments, probably I think over 130 projects right now that are taking place, because the CBDCs are such an important part of tax collection, of money printing, and of tracking usage. So I think that's the first question. I think the second question is, the whole Howey test question, and what is a security and what isn't a security, and getting around that issue is going to be really fundamental to opening up investment in many projects, when there will be let's hope there's a bright line for what is a security and what isn't a security in the U.S. And right now there are a lot of firms that are getting in trouble because of that. Probably knew they would, but decided that they would say they were sorry after the fact. So that's just two thoughts. Probably Daniel's probably much better place to come.
I mean, listen, as someone who has to be the bad guy and the creative problem solver with respect to what's a security and what's not a security, if you listen to the SEC, if the SEC had their druthers, they would say most of these are securities. Okay, what next? What now, right? And so it's like, I have to counsel everybody, you can't live, there's no black or white here. You have to live in the gray, and you're not even, there's no jurisprudence, and there's no black letter law. So you're kind of just trying to aim for a target that's always moving. So, you kind of want to craft the best argument for if and when, you can divine what the SEC might do. I mean, as a practical matter, just let's talk about the States. There's just too many projects there, whether in Web3, too many people doing different applications that are arguably securities, that between the SEC, the DOJ, the CFTC, there's simply not enough regulatory manpower to crack down on all of them. So, it's kind of like a risk mitigation strategy for the most part, where we are right now, which is like, don't do anything to make yourself a target. Don't do anything that's going to be blatantly on one side, because you saw even in the last few weeks, the Southern District here, basically had a really quick indictment, I think, with a rug pull scheme that involved the sale of tokens, et cetera. So you're seeing more and more noise and more teeth with respect to enforcement coming from DOJ, coming from SEC, coming from all these different places. So can they coexist? Yes, they can coexist. I would imagine if government is smart, there will probably be a safe harbor period where everyone gets grandfathered in and has the ability to come into compliance. But banking on government doing anything smart is not usually a safe bet. So we're living in this purgatory phase right now. So yes, it can and it has to exist, like they have to coexist. But what that looks like is truly anyone's guess at this point.
Have you guys heard about this whole plot by the Swedish and European Union to suppress Bitcoin pricing? There's a bunch of text messages that were released a couple of days ago. There's a Ford magazine article about it. Any thoughts on that? So the planning was to suppress Bitcoin but promote Ethereum.
That's interesting. So I've all I know is what you just told me, so I'm not going to pretend to be an
Has to
expert.
do with energy.
Yeah, so
It's an
I'll
ESG thing.
I'll just take your question and answer the question that I wanted to ask myself, which was
Politician.
which was basically, I think one of the things that you're raising, or one of the points that you're raising unwittingly there, Marty, is basically there's still a competition for market share with all of these different protocols, right? Like, so Bitcoin, no one does transactions on Bitcoin because of how costly it is and how inefficient it is. Ethereum went in and filled that void, and now you've got a bunch of other proof of stake protocols like Solana, like Cardano, like Avalanche that are all vying to be the next new option. So I think there's people have, no pun intended, people have different stakes in all these different protocols and reasons for doing those things. I don't know. I wouldn't suggest doing anything fraudulent. So, but yeah, I think so. Anyway, to answer your question, no, I'm not familiar with this, but I think it all just speaks to the point that it's still the Wild West and people are buying for market share when it comes to these currencies and these protocols. And I think what you're seeing is probably a function of that.
I mean, again, it gets back to the whole puzzle nature of this thing, but just getting back to what David was talking about in terms of government and not giving up currencies easily, right? So
yeah.
Well, I think there's some reason behind that, right? And we had an interesting comment here from Dr. I don't know if it's Ronald Ray or Ray Ronald, but one or the other. He said that governments don't want the token or crypto as they cannot tax them. I think it's a little different than that. I think the way they regulate the economies and the way they manipulate the economies to keep their citizens somewhat stable and happy is somewhat undermined by crypto because they don't have the control over them. And I think that's the real fear of government is now we don't have our centralized bank. Now we don't have this. And when things start going awry in the economy, how do we fix and interject and become meaningful there? I don't know what people's reactions are to that line of thoughts. Oltac, I saw you shaking your head up and down, so I'm going to throw it out to you and let you talk.
Yeah. Well, I just wanted to respond to that while also talking a little bit about the regulation, because I wanted to echo what Daniel was saying. The latest big regulatory circumstance, I think, happened around ApeCoin, right? You got the apes already, huge phenomenon, billions in value. And then the ApeCoin dropped about a month ago. And then, of course, it's a utility token, it's a governance token, it's great and all that. And you could technically say one shouldn't have there is no promise of course, nowhere in any of the documents, no promise of financial gain, except, of course, it started at 1 cent, now it's $17. So people aren't necessarily buying it or transacting with it because it's got some funky utility or some governing or whatever. I mean, it's a very interesting situation. And anybody like us who wanted to do a token like that would basically come under their umbrella, so to speak, because they have billions that they can fight SEC all day long, and they have high-powered lawyers and VCs and all that good stuff. So let them fight that fight. But they do have some interesting things to say too. I think the regulations need to change, and the infamous Howey test is now becoming more like a Hinman test. So meaning if you're sufficiently decentralized, there is no otherness. There is no other manager who's making you money. You're making your own money. And all these things, of course, have to be either through lawsuits by the government or by class action shareholders, so to speak. We will see them in court, and then things will settle down. For now, again, it's a matter of timing. A lot of people are doing things. Some of them are doing systematically and by banding together, and some of them are just sort of, seat of their pants. And so that's that. Now, when it comes to the tokenization and how the government reacts to their own tokens, perhaps, I think we'll see that coming too. And when that comes, there needs to be some sort of almost like a global regulation, or at least a global framework as to how you look at these things. You can't really have a global phenomenon, permissionless, like the blockchain-based financial assets, and then be in trouble in one country and be okay in another country. That only would go so far. So I think a lot of things are going to happen both at the national, international, and the supranational levels.
Interesting, very interesting. David, you mentioned a few minutes ago about the importance of adoption. And I think right now I've seen statistics around saying 300 million people are own or use cryptocurrencies. I know at the end of 2020 that about 15 billion of institutional assets were in there. I imagine that number is much bigger today. Yesterday, there was a comment made that the US and Korea are leading in adoption. So is the regulatory environment key or necessary for this to grow, or is this going to keep going? The regulators going to keep playing catch up, and how do you see that playing out?
Well, let me put it in the context of valuations, since that's kind of the discussion topic. And I think that, let me just draw on a few points that Daniel and Oltac made. The first on fragmentation, right? There's the number of protocols that exists is just unmanageable from an investment perspective. So you either put a lot of very small bets out there, or you focus, your efforts. I think generically speaking, we're in a very early stage of adoption, right? And so when you think about, something like Bitcoin, which is really purely a monetary instrument, unlike some of the other, protocols, purely a monetary instrument that has at least a defined maximum number of coins that will be issued. The value of Bitcoin today is quite volatile because you have low adoption, right? It has to be fully distributed in the economy before it starts behaving like a monetary asset. Until then, it acts like a risk asset. And so the point is, yes, you can look at the number of users who are using crypto, but when you consider the fragmentation and you consider that not all of these protocols are going to exist in 5 or 10 years, that we are going to have a rationalization of the services that are being provided via blockchain, that the real question is, where does liquidity get focused? And liquidity focus is the #1 determinant of success beyond business model, is the #1 determinant of success in building a blockchain product. And so the next question is it the number of people or is it the amount of capital? And clearly we know it's the amount of capital. And so then the question is, well, is it retail or is it institutional? And it's definitely institutional. So, we're in early stages of institutional adoption, right? I mean, you really started to see, aggressive adoption starting in August of 2019 with a number of regulatory changes that took place. But the institutional adoption is going to continue to grow. I think it's going to grow pretty exponentially over the next, 10 years. And when you see that happen, that's when you're going to start seeing concentrations of liquidity. And of course, that's going to drive, real price discovery. And price discovery is going to be key to build confidence for the retail investor to come in and really be, a long-term holder versus a day trader who's kind of in there and kind of looks at the momentum and usually loses a lot of money.
David, I have a question for you. So you talk about institutional adoption. Do you think it sounds like a chicken and the egg as far as like, if I have institutional money, I would probably wait for there to be a clear regulatory environment because it's just too much risk associated with adoption. So do you think that'll be the catalyst, or it'll be institutional adoption that will push the regulatory?
Well, Germany is a great testing ground. Germany has already authorized a very small percentage of pension assets to be allowed to be invested in crypto. That was authorized last year, and is you're already seeing a great deal of interest in Germany of asset managers looking to and we're talking about asset managers and pensions. So we're really talking about more buy and hold than, let's say, institutional hedge funds that are really, algorithmically trading the coins, which is really the more of the early adopters in institutional. So I think Germany is a great proving ground, and clearly I think the US, you're seeing many of the large asset managers, money managers, my former employer being one of them, pushing for more crypto capacity within, the ERISA frameworks.
Oltac, do you want to tack on here and give us your 2 cents on this?
Yeah, sure. I'll try. I think the crypto is most definitely here to stay. That's just done. It's already $1 trillion. But again, it becomes a definitional issue. When we say crypto, do we mean Bitcoin as a store of value? Do we mean Ethereum that's maybe a transactional value and it's going to be transacted? Or will it be invested in the treasuries of asset managers or sovereign wealth funds and what have you? So it is increasingly becoming tough for me to think monolithically about the so-called asset class. Like when I think of crypto, I don't know what it means anymore, which is a good thing because that's growing pains. So with respect to all the things that are happening now, I think a good 90% of them will die in the next 2 years. The remaining 10% will take over literally half the other stuff from the past. I can't predict where the Bitcoin price is going to be. If I could do that, then I would be doing that all day long and making money off of that. So yeah, I'm not sure what else I could say here besides pleading ignorance as to the generic concept itself. But at the same time saying, if we go specificity, then of course, we have all our theses and hypotheses and trying to empirically and analytically figure out ways to act on them.
Great. So Marty just sent me a note. We have about 5 minutes left. So I want to end on this question. It's 2032 and Marty brings us all back to discuss crypto again. What are we talking about in 2032? David, I'm going to put it out to you.
I guess
the unfair question of the day.
I guess we're probably not going to come together, and we may not even be talking. We might just have chips embedded in our heads, and we'll just be kind of feeling the conversation. Yeah, I to be honest with you, I just plead in ignorance. To be honest with you, I don't know.
I really don't
know. All I do know, and I agree with Oltac, blockchain is here to stay. Crypto projects will come and go. I agree with him, most of them will go, but blockchain's here to stay. And it's really about conceiving where there is the most efficiency to be extracted. What services, what utilities are the most inefficient where blockchain can extract value. And so that's kind of my thought. Yeah.
Right.
Probably not a non-answer. Sorry.
I know, David. I'm with you. I think history's littered with people that tried to predict the future and then got hanged for it. So I'm not trying to get hanged. But like the best answer I can offer is that I don't think the climate's getting. I don't think the planet's getting any cooler in the next 10 years. And so when people complain about things like, the energy that's required for Bitcoin to maintain its health and, moving from proof of work to proof of stake and what that'll do for energy conservation and carbon neutrality, I think the safest thing I could say is that those protocols that are carbon neutral or carbon negative are the ones that'll probably have the longevity. So those will stick around. I'm with David. Blockchain is going to stick around. I think everyone said it in a million different ways. Every so often there's a cycle where like Silicon Valley and the world loses its mind over shoehorning a buzzword into a company and thinking it's a good idea. And if you've been to South by Southwest this year, which I spoke at this panel, during South by Southwest, it seemed like they were shoehorning blockchain into everything and saying that, because blockchain's involved in it, it's a good company. And so I think there will be comeuppance, there will be a reset, there will be some sort of hopefully sane regulatory framework, and protocols that will survive will be the ones that don't have an active role in killing the
I think it's going to be pretty profound. In 10 years, it won't recognize the world you're in today. In 10 years later, it's going to be.
The question I always ask is, if you're going to rebuild the financial system, would you rebuild it the way it is today?
And I think most of the fintech companies are fake front ends with legacy back ends, and so Web3 will completely redefine all those things, right? Because it's not a superficial fix. It's
People want to. The
sure.
question, and I think the question was asked about credit card companies and processing, was that most people just want to disintermediate,
right,
and just get away from the high cost aspect. So if you have 3%, surcharge on what you're making, that could save a company from an operating cost point of view, right? So yeah, but I think it's very interesting. I still think there's a couple of issues with crypto, which are, there's the whole token market maker aspect, which I think is a big deal. I still think there's an issue of decentralized versus centralized. So I think most people will claim that Ethereum is centralized.
Everything's centralized.
And blockchain is decentralized. Bitcoin is decentralized, right?
Everything's centralized.
Bitcoin's mined by the top 4 pools. So everything's centralized, right? More or less.
And even in these companies, even in every DAO, they're centralized. They're decentralized in name. If you look at most of their charters, there are very few decisions that can be made.
But I don't think there's any doubt that there's a bullseye on the head of any crypto that competes with actual fiat currency. So.
Oltac, you're the only one that hasn't had a chance to take a shot at this question. Why don't you wind it up for us here and bring it to an end?
Last comment, sure. I'd love to. I think what we had so far as the Socratic synthesis is happening. We had capitalism, right? We had socialism, and now I think they're going to synthesize, because everything is hyper financializing. Every little transaction will have a price attached to it. And I think DAOization is definitely going to happen, because ownership is going to be distributed. Now, I don't call it decentralized, because I don't think that some people, it's not going to be like a social decentralization per se, but like I could easily imagine Mark Zuckerberg to basically say, I got 17% of Facebook. I know that if I don't do something about this, I'm going to lose my billions. So I am decentralizing my shares. I'm going to basically airdrop all my shares to 4 billion users, consider it a UBI, universal basic income. The minute he did that, my prediction is the Meta would go up 10 times in value. Why? Because now I'm not on Facebook anymore. I haven't been for a while. But if I own the piece of Meta or Facebook, and if it's monetizing me, I might as well be monetizing myself as an owner. So will this happen? Well, Zuck is a smart dude, so I think he's going to make this happen. Otherwise, if Google did it, I'll go use Google. If Apple did it, I'll use Apple. So DAOization is inevitable. I call that the socialist revenge. Hyper-financialization is already happening. I call that the capitalist revenge. And therefore, ushering in a new world, hopefully it'll be for the better. I'm not sure, because if everything has a price, then I don't know how we price love per se. So I'm not sure.
So we'll be talking about a whole new regulatory ecosystem in 10 years is what we're getting down to based on that answer. Very interesting. I want to thank Oltac. I want to thank David and Dangle. Great comments, great input today. Marty, great opportunity to be speaking in front of this group again today. Thank you for putting it together. And I would ask, the three of you particularly to take a look at the comments that are in the chat room. There were a few in there that we didn't get to. So if you could take a look and maybe provide some feedback to that would be great. Thank you, everyone. And Marty, look forward to doing this again soon.